the money market fund, or the MMF. It has become quite popular in Kenya in the recent past. Many of us have invested in the money market fund, or at least you know something about the money market fund. But very few of us understand what really you are investing in when you put your money in the money market fund. Are there other funds that you can invest in, and how do they compare to the money market fund? So in this particular video, I want to shed light to help you understand how these products work and what is the ideal product for you. Hi, my name is Alex Kibebe. I'm the lead at Rubiani Wealth Management Limited. And in case you are interested in investing, maybe you'd like to define your own investment path, then I would encourage you to like and follow our social media platforms, YouTube and all the other platforms. They'll be shared in this particular video. So let's get into it. So a money market fund is what we call a mutual funds. Those are products that are available by people we call fund managers. So who is a fund manager? A fund manager is a person who's been licensed, or an organization that has been licensed by the Capital Markets Authority to pull funds from the general public. Maybe if I speak it from a Kenyan perspective, it's more like a public chama. People put in their money in that particular product, and then the fund manager is able to invest the pooled funds. Yeah. So if you look at companies like CIC fund, which is the biggest, it has a fund of over 60 billion Kenya shillings. So they're able to fund small monies from different people and organizations, come up with a big fund, and they're able to invest that big fund. So what is the advantage of investing in money market? Number one, because it's a big fund, they're able to negotiate better rates, because the more money you have, the better you're able to negotiate rates. Whether they are lending banks or other financial institutions, they're able to get a much higher rate. Again, of course, they have, people who are who have expertise. Yeah, people who are able to, who have been trained and are able to study the market, do their research, so that their investment is more productive, it's more on point. Yeah, so that's what a money market fund is. But these fund managers don't only deal with money markets. There are actually 5 different kinds of funds. Yeah, money market is one of them. And I just want to be able to go through all the 5 and just give you a summary of each. So the first mutual fund I could talk about is what we call the equity fund. The word equity, stocks, shares, they mean pretty much the same. And so just like the name says it, an equity fund is when a fund manager pulls money and then invests in the stock market. So they can buy a portfolio of stocks. They're buying stocks in equity, Safaricom, different stocks, and come up with a portfolio. So you as an investor, when the stocks go up or when they pay dividends, you're able to make an income or a profit from investing in the equity fund. The second fund that is available in these fund managers is what we call a bond fund. And a bond fund, just like the name says it, invests in bonds. What are bonds? Bonds are financial instruments where you're investing for long term. Long term is beyond 1 year. So the investment instruments where you're investing beyond 1 year, and they are fixed income. In other words, by the time you're investing, you already know the returns that you're going to be able to make. For example, when you invest in a treasury bond or a corporate bond, they tell you, invest with us for 5 years, we'll be paying you an interest of, let's say, 15% every year. So those are what we call bonds. And so a bond fund pulls money and then puts it in these corporate bonds, in these treasury bonds. And when they are able to make the interest, you as an investor are able to profit from this. That is what you call the bond fund. So the third fund I'll talk about, allow me to get back to it, is a money market fund. And the money market fund, to contrast it with the bond fund, is that now it invests in financial instruments that have a period of less than a year. Yeah. So for example, the treasury bill, bank deposits, commercial papers, those are just investment financial products that have a duration of less than a year. So again, they pull funds and put their money in these particular financial products like I have mentioned. The fourth investment product is what you call the REIT, or the Real Estate Investment Trust. Now, the Real Estate Investment Trust invests in real estate in different forms. For example, we have what is called the D-REIT, or the Developmental REIT. That particular REIT, you invest and the fund manager pulls the money and buys land, they develop it, they sell, be it houses or commercial property, whatever it is. Then from the profit of that development, you'll be able to make a profit as an investor. That contrasted with what you call the I rate, or the income rate. This one is where a fund manager pulls funds and then they buy a portfolio of products. Maybe they buy buildings in town, a set of them. Then you make your income through the rent that is paid. So it's more of an income rate. So that's the difference between a developmental rate and an income rate. And that's the fourth fund. Finally is the fifth fund that is called the balanced fund. Now in this particular fund, the fund manager once again pulls funds, but now the fund manager has the liberty to put the funds in any of all these products. They can go into equities, they can go into bonds, they can go into real estate, they can go to any particular investment class or product. And the advantage of this is that the fund manager is able to assess what season is this. For example, at the current season, the treasury bonds and the corporate bonds are really doing high. And so they say this is an ideal time to get into bonds. So you'll see them exiting from the equities because they're doing low. That's the shares. And now they're investing in bonds. Yeah. So the balance fund gives that liberty to a fund manager to determine wheresoever they want to invest. And so those are the 5 funds available. We've talked about the equity fund, we've talked about the bond fund, we've talked about the money market fund, the real estate investment trust, or the REIT fund, and finally we've talked about the balance fund. The 5 funds that are available in Kenya. So I just want to go slightly deeper to compare their performance, or how they how they work and how they've been performing, especially in Kenya. And I'll start with the equity fund. Now, equity fund invests in the stock market, and for the midterm, we're talking about going back 6-7 years back in Kenya. The equity markets has not been performing well. It's not been bullish consistently for that long period of time, and for that reason, the equity fund has not been performing well. If you look at the fund manager, only a small portion of the money under their management is in the equity fund, again because of that poor performance. Yeah. So for that particular reason, maybe not for this season, an equity fund not ideal. We go to the second the fund, which is the bond fund, and this is where I want you to pay attention. For the longest time, the bond fund has been trailing the money market fund, because the money markets have been performing better in Kenya when you look at it in the long term. However, we are seeing bonds going as high as 17% in the recent past. And what has that done? It's pushed the performance of a bond fund. And so many people who are in the MMF, you're actually losing money. If you move your money to the bond fund, we are seeing bond funds paying 14%, as the money markets are doing around 11%. And so the bond fund again invests in bonds markets. It's performing better now. We are seeing 14+% with fund managers who have this particular product. So if you're an MMF client, this is the time you need to be shifting to the bond fund. Yeah. So of course, we've talked a little bit about the money market fund in Kenya. It has traditionally been performing well. Currently, it's doing around 75+% of all the money under management. In other words, more than 75% of the money in mutual funds is in the MMF, for the reasons I mentioned. Very popular in Kenya because it's historically been performing well. But as I mentioned, the things are changing. You need to be aware of this. Then there's the real estate investment trust. It's still young, I would say, in Kenya. And so we've not seen a good performance from the REITs. There are only two fund managers who offer REITs. That's the Fahari REIT. That's the Fahari rate, and we're talking about the Econ rate. Yeah, so Econ has both a D rate and an I rate. Fahari is only an income rate. Those are the only 3 rates available and permitted in Kenya. Yeah, And so they are still young, it's still a new product, its performance is still too early to rate. And so, especially because real estate takes time to see its performance. So that's it from the REIT. And then finally, we are talking about the balanced fund. Again, not performed very well in Kenya in the recent past, pulled backwards by the equity funds, because most of this balanced fund had exposed to the equities that have performed poorly. So again, the balanced fund in Kenya historically has not performed well. So from that summary, you can also already tell that the bond fund and the money market fund are the ideal investment vehicles for this season. Again, things can change. You're still watching the rate. The equities are still low until probably when the equities go bullish. But that's the paradigm when it comes to the funds. And so in case you'd be interested in knowing more about funds, again, as you can see, they keep shifting. You need to be aware of what's in the market to make the best decisions. And that's where Rubiani Wealth Management will come in. We are able to give you market intelligence to help you make the right investment journey at any particular point. Yeah, so in case you need more information, be it about wealth management or about investment in general, yeah, I would ask you to consider Rubiani Wealth Management. We look to help you build your wealth by giving you the right information, well-researched information, advice, and we work with you through a mentorship program, yeah, that we are able to keep you accountable and walk with you on your journey to wealth creation. So if you'd like to get in touch with us, again, the website is www.rubianiwealth.com. Again, you can get the links in this particular video. Our social media handles is Rubiani Wealth Management and Rubiani Kenya. You can just be able to search for those two. You'll be able to get more about us. Like, follow, do what you need to do so that you can keep yourself abreast with the best information when it comes to investing, and especially in the East African platform. Thank you.